Welcome back to Wealthion's live coverage of election 2024. I'm joined by WindRock, our registered investment advisor partner, Chris Casey of WindRock Wealth. And Chris, welcome back. I know we had a video of yours on Monday talking about some stuff, but now it's come to fruition. I didn't know that we would have a winner announced, but it seems they've learned from 2020 and all the election ballot counting was most of it was done. There's a couple states still up for grabs, but Donald Trump will be our new president coming in, and let's discuss some of the economic implications. Let's start with the stock market, Chris, and it's exploded. Dow up 1,300 points, Nasdaq up over 400 points. What are you seeing? And explain to us why this is going on.
Yeah, and thanks for having me back on. It was a late night, so it's nice to get back to it. But the market is up pretty much throughout all sectors on the equity markets. And what really caught my eye, though, were certain things that I would have expected to have done better before actually leading into the election if people thought Trump was going to win. So, for instance, oil drilling. I mean, he said in his acceptance speech, right, the Republican National Convention, drill, baby, drill. Natural gas is going. These are all up, 3+%. I think drillers I saw were up maybe 6 or 7% for the day. Natural gas is all up, which makes sense because now presumably you'd start exporting again, right? You're going to export natural gas domestically. The price should rise. That should help producers. Small caps are up big. They're up even much more so than the broader market as measured by the S&P 500. They're up last I looked about an hour ago, like 4% compared to around 2% for the market. So the market as a whole is up. And I think one of a decent explanation for it, this isn't my theory, but I heard this back in 16 when the market did the same thing. And Goolsbee, who's the current president of the Chicago Fed, I remember I saw him speak and he said something to the effect of, well, we're anticipating tax cuts. And the present value of those tax cuts are effectively, for these corporations, are effectively how much the market's moved up. And that was the case back then. And so I wouldn't be surprised if that's the case now. And I could see kind of a mini bull market, at least for the next couple of months.
It's interesting. Are there sectors? I think the pharmaceutical industry has gotten hit a little bit today. Are there sectors that you think under Donald Trump won't do as well as they've done in the past 4 months or would have done under Kamala Harris?
Well, certainly. I didn't look at pharmaceuticals in particular, but I imagine I'm a little surprised by that because I would imagine they'd be happy with a Trump victory because Harris' campaign was calling for price caps on a lot of pharmaceuticals. Now, maybe Trump will do that as well, for all I know. So that surprises me a little bit. As far as things that I'd stay away from, obviously anything with a green initiative is pretty much dead in the water. Anything I'd be very concerned if I had a company that imported most of my goods. Like, so for instance, if I was a retailer, a clothing retailer, and I got all my supply from China, I could see margins being compressed significantly when presumably tariffs will be increased. Those are some areas I would definitely avoid.
So, Chris, you mentioned tariffs. Explain to me tariffs and explain to our viewers tariffs versus taxes. A tariff is in essence a tax. And I know that Donald Trump said, oh, China will pay the tariffs. China isn't really paying the tariffs, are they? It's the importers into the United States who are going to pay the tariffs.
Yeah, and I think I said this last time, and no tax is neutral and doesn't create misallocations, doesn't cause distortions, doesn't cause, frankly, a reduction in the standard of living, all things being equal. But I would say tariffs are a little bit more benign than compared to a lot of different taxes out there. In fact, I believe for last year's budget for the fiscal year for the federal government, which ended September 30th, I believe the tariff income or revenue was around $80 billion. And that's just a drop in the bucket compared to when you have $5 trillion in revenue, right? It's fairly small. So there's a lot of room for that to grow going forward.
And these tariffs, do you expect countries to any country that's imposed a tariff upon, say, imports coming in from China, imports coming in from Germany, imports coming in from anywhere? Trump is promising a tariff. Do you expect those countries to reciprocate and say, okay, you want to put a tariff on our goods, we're going to do the same to you?
That's quite likely. I mean, we've seen that recently with China and the European Union. I can't recall what the European Union put some tariffs or quotas on, but China immediately retaliated on, so I believe, some luxury goods. So it's not even necessarily the same industry or the same good that's affected. They retaliate in different ways. So that, I think, that is likely. Now, I think that would be a poor decision on the part of any country doing that, because I mean, I strongly believe in free markets and free trade. So theoretically, I'm against tariffs. However, not every country feels that way, and so I think they would view it as quid pro quo. It's their way of potentially reducing tariffs in the future. But in reality, their country would be better off if they did not retaliate, and just, yes, it's bad that there's tariffs being placed on exported goods from the foreign country, but retaliating would just make things worse.
But that tariff is really going to be passed on to the American people in the form of a higher price, because the tariff is going to have to be paid by whoever's importing that good. So ultimately, it's the American people paying that tariff.
Yeah, any consumer, ultimate consumer. We're not always talking, obviously, about retail goods. So there's companies that are buying imported items as well. Yes, the consumers in general, tariffs, do have a negative impact. Now, whether that eats in the profits, or there's increased prices, or there's less capital expenditures by these companies, there's a whole different ways it could play out, but they're all negative to a degree.
Do you expect, and I would assume that Donald Trump's going to go after China again and try to limit trade or increase tariffs. Do you expect that to hurt the AI industry at all?
I haven't thought about that particular aspect. I would guess not, and primarily because the AI, let's call it AI trend, is here to stay. I think that's one of the few areas where, if you had to close your eyes for the next 5 years and disregard all the volatility in the marketplace and just think about, where do I want to have my money, it's probably one of the safer spots, because it's a real trend that's here to stay. And frankly, we're in the very beginning, early stages of it. And so I think the full benefits, and frankly, the publicity and hype, I don't even think is where it should be. But I think over the next couple of years, having that played out, I think AI is going to be fine, kind of regardless what happens, whether it's tariffs or anything else.
Can you? I know you've looked over Trump's economic plan. Can you go enlighten us a little bit on how you think that he's going to help the country?
Well, I think even better than looking at any kind of proposed plans, because there's a lot of things he's promised and said over the campaign, would be to look at what he did before. So one of the first things he did back in 2016, by I believe December of that year, you had what passed as the Tax Cuts and Jobs Act, which massively reduced taxes, especially on the corporate level. And I think we'll see something akin to that again. That's one of the major benefits I could see coming out of this administration. The other, and I thought he did a great job of this last time, it's probably one of, I'd say, the top three things I thought that former administration did under Trump. But the other item is just deregulation. And you may recall he had that policy in the first term of, for every regulation we have, we're going to rip, I believe it was 3 out of the books, right? We're reducing regulation for every new one that's introduced. I love that idea. And now that Elon's on board, and he clearly, whether he's looking to cut wasteful spending or whether he's looking at just cutting regulation, I think, if anything, they'll be more pronounced at this go around.
Cutting wasteful spending is absolutely important, but when you get to the point where every tax dollar is spoken for because of mandatory programs, it doesn't matter what you cut, the deficit isn't going to come down anyway.
That's true. and frankly, anything that we do as far as cutting waste, et cetera, first of all, it's very hard to do, right? If the president had a line item veto, which
Right.
I think constitutionally it should be interpreted that he does, this would not be an issue, right? Because it could be handled much more effectively. But with waste being cut, yes, it's going to be a benefit, but there's bigger, more ominous things that are coming down the pike that I think will make that fairly negligible when you look at the debt situation, et cetera.
Do you think we're set up for continued economic growth under the new president?
I don't know how much. Well, let me rephrase that. There's a couple things like I just mentioned, whether it's deregulation or tax cuts, what have you, which are benefits in my mind. However, I do think eventually they're going to be overwhelmed by some very negative factors that are out there, namely the debt level. I mean, I've been commonly saying for the last couple of months, I would say there's 35 trillion in debt. That's about to flip to 36. If you look at debtclock.org, that's going to move any day now. That alone, along with our structural impediments to reducing the budget, which you just mentioned, entitlements, they actually, on any given year, may equal tax revenue. So there really is no way to cut that outside of having full congressional support, which is unlikely, even with 2 Republican houses. So there are some real negatives, I think, on the horizon.
So it's no surprise that Donald Trump wants to increase spending. There's, his economic plan has been poured over another $7 trillion over the next 4 years that we're going to have to pay for. Inflation, Chris, we were at a point where we got it down, I think, to about 2.4, but now, with government spending going to be an even bigger part of GDP, we're going to be having an inflation problem, aren't we?
I think so, but for different reasons. I've seen these so-called studies comparing, for instance, the Harris and Trump tax plans or budget plans. I don't believe it. It's no different than the CBO comes out with stuff all the time, and they just have the most ridiculous projections that are always wrong, right? So I don't necessarily think that whoever was elected yesterday will really impact that. The truth of the matter is that once we have a downturn in the financial markets, in the economy, they're going to go right back to their same playbook and start printing. And that's regardless as to what happens with the debt situation, which they have to manage. So I don't think if we see increased inflation, I don't think it's a budgetary issue. It's more of a Federal Reserve and debt issue than anything.
But at some point, the debt, the bond market is going to have to respond in kind. And do you fear that at some point there could be a problem with people buying our bonds?
Oh, absolutely. Let me say this. I think right now we're in the event horizon. And what I mean by that is, if you've ever seen like a science fiction movie or read anything about astrophysics and stuff, black holes suck in everything. At the point at which they do that is called the event horizon. So once you pass that, even light cannot escape. There's no getting out of it, right? And a key point of that too is that you don't know when you pass it. So we could already be in one for all we know. Actually, they've talked about that before. Our universe could theoretically be in a black hole. You just don't know because there's nothing magical happens at the event horizon. You just never know. But I think we're already at that from a budgetary perspective right now with the U.S.
So let's talk a little bit about healthcare. Under Kamala Harris, she would keep Obamacare or the Affordable Care Act. Donald Trump is going to try and eliminate it once again. We'll see if he's successful. But if he is, it's going to cost the American people a lot more money because healthcare will be a little bit more expensive. You'll have more people without insurance going into hospitals and won't pay the bill. So it'll cost people like you and me that have insurance a little bit more money. The industry, does it need an overhaul at this point?
Oh, healthcare industry, absolutely. And I'm not by any means a healthcare expert, but it doesn't take a super smart person to look at any given industry and see how ossified and all the structural problems with it and how expensive it is, and compare it to the amount of government regulation. So we see this with education, with defense companies, and obviously with healthcare. So the solution, really, whether or not Trump's proposals cost more money, depends on what exactly he's talking about. Now, what he's probably talking about is just getting rid of the mandate to have insurance, right? Which I'd agree with, because I view that as completely unconstitutional. So it should be struck. However, I would say he's not going to go far enough. And by the way, I don't think anything's going to happen with healthcare. It's whenever you have a government program set, it's there forever, right? It's very difficult to roll anything back. But if he had unilateral control, what I would suggest that Trump would do would be to roll back healthcare completely, meaning get the government out of it. Stop making it more, make more sense to have companies pay for health insurance. I mean, why are they doing that instead of paying for my car insurance? Well, it's because they have a special deduction, right? So the key to helping healthcare is freeing the healthcare market. And if you just do little pieces here and there, things could be worse, but that just goes to show that you should scrap the whole thing.
So is the healthcare market something you'd invest in now? Because if it doesn't change much, it'll continue to grow, and insurance companies will continue to make oodles of money.
Yeah, any industry that is heavily regulated and impacted by the government, the major players tend to do very well, right? Because there's no new entrants into the space. They tend to be protected from any kind of technological, disruptions. And so in general, that's kind of a good playbook. It's not something it's on our radar screen that we particularly looked at, but it doesn't mean we're not open to it.
So let's talk about the debt and the Fed and interest. The inflation is down around 2.4%. We have another Fed meeting coming up tomorrow, and you expect another cut.
I think they will, but probably not for the reasons a lot of people suspect. And by the way, they have another meeting in December.
Right.
I could see them making 2 rate cuts before the year out, and I think the market does anticipate that. I think the main reason they would do that is because it does provide political cover as to their previous cut of 50 basis points right before the election. If you cut just once right before the election, it looks very selective, right? And they didn't really have a good answer why they did it. I think personally that they panicked, but a lot of people would view that as a political move. And if so, I think they would want to dispel that by doing some small fairly maybe 25 basis point cuts here before the year is out. Next year, though, is a completely different story. We'll have to see what happens.
Yeah, that's what I was going to ask you, because obviously a new president comes in January 20th. Interestingly enough, that's Martin Luther King Day. So you have Donald Trump being inaugurated on Martin Luther King Day. And so the Fed will have another decision to make. I guess they'll see what President Trump does in his first few days and act in kind. Or do you expect more cuts going down the road? I know that they talked about, maybe bringing rates down to 3% or 3.5%. Right now they're hovering around 4 3/4. That would be another point and a quarter. But if we're talking about another 50 basis points, we're down to about 4 1/4. Do you think the Fed will say, you know what, let's pump the brakes and see what we're going to do now?
Well, as the Fed always says, they're data dependent, right? They say that each time. And
whether we believe that or not.
Well, I believe it, because the way I interpret that is that they're extremely reactive, right? Because they really are. They're just constantly reacting to new stimuli that's put before them. That's really what they're doing. I don't think there's an overall game plan. There's certainly no philosophy underneath it. I guarantee that. As far as what they do next year, I think it's highly dependent on the markets. So let's just see if there's a financial downturn, let's say the first quarter, if the economy, which I do think will happen, if we start to experience weakness or recession, they'll go right back to the same playbook, and all bets are off. Then they could cut quite a bit. What I do know, though, is that Trump has very limited ability to reshape the Federal Reserve Board. There's 7 governors, right, that are voting governors. And there's only 2 that have terms expiring during Trump's term. and they expire fairly late in the term. I think one's even like towards the end of 4 years. Now, Powell does have his chairmanship come up, I believe, in May of 26, and Trump has already been on record that he won't. Powell still be on the board. He just wouldn't be Fed chair. He's not going to renominate him. So we'll see what happens. But again, the point being is that the Federal Reserve policy, I think, will continue intact. I don't even want to call it policy. Let's call their reactions will remain intact for the foreseeable future, because that board is not going to change.
So I wanted to ask you about that, and I know that you're knowledgeable in that area. Donald Trump has said that he wants more input into the Fed. Is there a possibility, if he wins both the House and the Senate, that he's able to change that policy at all and have more say as he wants to do?
Well, I haven't seen the exact language, and there's I don't believe there's a policy statement about this on his website, but having more input could mean a lot of different things. That could mean he has lunch with Powell, which is not uncommon for a president to do, right? And he will explain to Powell, this is where I think rates should be. I see absolutely nothing wrong with that, and I think that's something that's already happened. But what you're talking about is more of a legal change, which I doubt would even be proposed, let alone passed. So, and I'm not saying that would necessarily be a bad thing. It may very well be a good thing. I just don't see it happening.
So let's talk about what we investors have to do now, or what we could do now. How do we adjust our portfolios? Like you said before, stay away from green energy, because we know Donald Trump isn't for green energy at all. And a lot of those programs for solar energy or you can put on your house, those are probably going to go away. What about nuclear energy? Is that something that we should think about investing in?
Possibly. Let me first just address the comments about green energy. He's not for green energy per se. I don't think he's against it. What I would say, what the way I am, and I suppose the way Trump may be as well, is that you'll let the market decide whether or not green energy makes sense, right? So it may very well or may not. I mean, there's a lot of benefits to electric cars. There's a lot of detriments. Let the market decide. There's no reason we have to have a mandate to buy a certain amount by a certain date. There's no reason to have, tax cuts to promote this. Just let the market decide what green energies make sense, which ones do not. As it relates to nuclear, their long-term projections look fantastic as far as, uranium, what have you. The amount of construction that's going on in China, in India, in a whole bunch of countries is looking to at least double nuclear capacity, let's say in the next 20 years. So from a long-term perspective, uranium, anything associated with nuclear reactors looks very good. I just don't know if now's the time. And frankly, it's probably not something I've looked at closely enough, but may not be the time to do it.
Are there any policies that you look at that could help shape our portfolios at this point? Anything that you think, okay, you know what, this is, and we, interesting enough, we have a track record. So we have 4 years of previous administration to go on. Anything that any policies that you're looking at that should help reshape our portfolios, where you say, okay, you know what, he's going to do this because he's done it before. Let's buy this, or let's sell this if we own it and get into something else.
Sure. And apart from the sectors I already mentioned, which I think could benefit quite a bit under a Trump presidency, namely energy, I think cryptocurrencies are a great spot as well, namely because of JD Vance's his support and involvement, and the fact that he clearly has Trump's ear. I think we'll see a very beneficial framework in that regard. Obviously, if you look back to the first administration and you thought, okay, what made sense back then? And it's hard to argue with any. This is, by the way, all things being equal. So you're assuming no other economic factors, what have you. But obviously, real estate back then, the tax legislation of the Tax Cuts and Jobs Act was extremely beneficial to real estate, whether it's the opportunity zones, et cetera. It's probably the most tax efficient asset class out there. It's also potentially a great inflation hedge, depending on what type of real estate you have. So that's an area that probably people should look at, but a lot of caveats, because things could get really bad in a lot of different sectors within real estate. But the ones that will make sense, the ones that are inflation hedges, I think will do quite well.
So let's switch to global markets. What are you seeing in the global market reacting to Donald Trump being elected president once again, and how do you think that'll play out going forward?
Well, it's hard to say, I think, how the markets reacted overseas. Europe, as I recall, was basically flat to slightly negative. Japan was up, 2.5% or so. And now that's not unusual for Japan. Japan seems to be extremely volatile this year. And we saw moves down of like 12% one day, right? So being positive 2% may not be newsworthy. It could just be, noise in the background. So I think the reaction has been somewhat muted. It's actually, I thought the Europeans would be more disturbed by a Trump presidency. And I thought that would be reflected more so in the stock markets or indices than I've already seen today. So a fairly muted reaction, I would say.
And geopolitical things, how will that be handled differently, do you think?
Well, I don't think Zelensky slept last night, right? This is like his worst possible nightmare. I mean, there's a whole bunch of geopolitical things, whether it's the war in Gaza, the war in Ukraine, just Taiwan in general, North Korea, Iran. There's a whole bunch of different things to look at. But really, the one most immediate area I think will change, and he said will change, right? I think he bragged that he could solve Ukraine war in like 48 hours or something like that, which I think he actually can for both sides. I think it's actually not that difficult. But that, I think, is the most immediate thing that's going to happen come January.
Do you see, I guess my question is, are things going to get better for the American people than they perceived they were in the previous 4 years, do you think?
Well, yes and no. Yes, I think the policies we talked about with deregulation and tax cuts, et cetera, those are beneficial for the American people. They're beneficial for growth, right? However, there's other situations out there which will just overwhelm this. Like I said, it's mainly the debt situation, and there's no way out of this. $36 trillion in debt. You're taking in $5 trillion a year. There's no way to even create a surplus, start paying that down. You're just going to have continued deficits. We could be at the point, like I said, we're in an event horizon, but really, what is that point? When does the market react? Because the bond market hasn't reacted that much yet. You could argue that overnight, the bond market reacted. I think it was up 10-year, maybe it was 20 basis points to yield or something like that. But that's kind of nothing. I think what we're looking for eventually is that some point in time, we're going to have exactly what happened in the UK with the gilt market. So what happened there, I think it was September of 2022, is that they had a new budget proposed, and the market just kind of puked when they saw this, right? There was no bid on the bonds, and we're talking about 20 basis points overnight. You had over 3 days, 160 basis points, right? So it went up 1.6% in 3 days, which is staggering and unheard of. I think at some point that's going to happen in the U.S. I don't know what that point is. Is it where interest expense, is 50% of the budget? Is it when, or there's a whole bunch of different ways to look at this, but at some point, the market's going to wake up, realize we're in the event horizon, and I think we're going to have a repeat of the UK peril that happened in September 22, but it could be a lot worse.
So we have a couple of viewer questions, and if you have questions, shoot them our way. Richard Cullen, Chris, asks, if the U.S. economy is currently as strong as being reported and markets are at all-time highs, why did Trump have such a convincing win, as the main issue with supporters, according to exit polls, was the economy?
Because people, are living their lives and not reliant on statistics. So, for instance, if you look at different metrics, whether it's to imply a standard of living. So if you look at, for instance, real wages or salaries, on real terms, there's been negligible growth over 20 years, right? Something like that. So people, I think, intuitively understand that even though GDP may be up X percent, it feels weak. It feels like a recession in a lot of ways. And when you throw on inflation, where prices across the board are up 20%, And by the way, I'm not blaming Biden for the inflation. I blame both him and Trump. I think they're probably equally responsible,
Right.
because the Fed actions happened in Trump's last year, right? So when you look at that, people feel worse off, no matter what the statistics say.
And any concern that the Trump tax cuts are actually going to hurt the lower income class? It's like the bottom 20% is going to pay more of a percentage of their income towards taxes.
Well, I don't know if that's true. I know I've seen headlines in that, and certainly that was a major point of the Harris campaign. Whenever they compare and contrast their so-called tax legislation with Trump's, and I'd be shocked if that's true. I mean, the last time everyone was better off, right? I don't think anyone's paying more taxes, and we should be. And frankly, even if that was the case, I think in general the philosophy of citizens should always be to embrace tax cuts, no matter for whom or for what reason. Like, so for instance, I remember, I think it was Rothbard, the economist Murray Rothbard wrote years ago, if there was a tax cut to wear eyeglasses, we should support it, even though it's going to cause distortions. When people are going to go out and buy eyeglasses, what have you. But in general, it's starving the budget to a degree, and it's helping certain people. So we should, I think, always embrace tax cuts, even if it could be somewhat compartmentalized or segmented, which I don't think it is in this case.
Another question came in from Sweet Pea. Do you think there will be upward pressure on interest rates with the instituting of tariffs? Interest rates have been dropping, but I suspect that will stop. We kind of covered this a little bit, but why don't you touch on that again?
Yeah, I don't think they're correlated. I mean, all things being equal, tariffs, negatively impact in general standard of living. However, what we already have in place, like I said, is pretty de minimis. And interest rates, ultimately, if you had no credit risk, et cetera, it's all based on time preferences as far as how people allocate their spending between today's goods and services versus tomorrow's. That's ultimately, theoretically, the foundation of interest rates. Now, the reason I think interest rates will go up is really nothing to do with tariffs. It's nothing to do with time preferences, et cetera. It's simply because, like I mentioned with the gilt example in the UK, at some point in time, investors are going to realize that they're no longer risk-free, that there is risk associated with these. So that's why going forward, I'd be very hesitant to look at long-dated bonds, because I think you can be hurt significantly there.
And one more question from Deb Warner. Is the inverse relationship between precious metals and the stock market the reason why gold is going down today?
I haven't focused on gold. I mean, it's hard to interpret any given day's price changes as having causality, right? That's a little bit more difficult. Now, gold's had such a major run up. I mean, it's probably up 70% from its 5-year lows, that I would be surprised if that's really the cause of it. It could just be a natural pullback.
And it's something actually I noticed, and we've heard Donald Trump actually say he'd like to devalue the dollar a little bit, but actually the dollar got stronger today. I don't know if you had noticed that.
No, Trump says he says a lot of things about the dollar. I don't think it matters what his views on the dollar are. What I'd like to hear a politician say is not so much that they think the dollar is strong or weak, or should be stronger or should be weaker. What they should be saying is that we just want the market to decide what the dollar should be. So there's no reason to want to artificially deflate the value of the dollar. All that's going to do is help exporters at the expense of importers, right? And no one's better off. So it's not so much what the dollar should be; it's more so let the market decide what the dollar should be.
One more question from, and I apologize, Abriami Aram. Which sectors will benefit most from the stock market and Fed interest rate cuts?
Well, we did mention real estate. I think
Right.
that's a major area that could be. And again, I don't know if the Fed's going to cut that much next year. And if they do, I think it's a response to severe economic weakness or financial market downturn. So I'm not trying not to answer the question, but it's difficult to answer that, all things being equal, because I think in the context of why they're reducing rates will be far more important than actually reducing rates.
It's a good point. And, as far as real estate, I think as they had cut rates, the 10-year has come down, but it did go up a little bit, which forced mortgage rates to go up. What do you think Donald Trump will do to spur the housing market? Look, prices are at an all-time high. That probably makes him happy, but at the same token, he probably wants interest rates to come down so people can buy those houses that are on the market.
Yeah, obviously, housing affordability is largely impacted by interest rates. So I don't know if he has a particular view on that. I mean, he probably wants things cheap, like he wants things cheap for everybody, so standard of living goes up. That's great. I don't know if he really going to have much of an impact on that particular segment.
One last question, and it's interesting one. How do you think this election has changed our country?
Well, let's put some numbers to it as far as what's happening, because I think it is significant. First of all, let's not forget Trump won the popular vote,
right?
Even though he had, I believe, 2 million votes less than he did in the last election. Right? I think he's at 71 right now. He had 73 in 16, and he had 62. I'm sorry, he had 73 in 2020, and he had 62 million in 2016. This is the first time a Republican has won a victory with the popular vote in 20 years, right? You have to go back with Bush defeating Kerry. And frankly, Trump far exceeded the vote differential than Kerry and Bush had. So it is significant. The people, I mean, electorally, it's fairly close to what Trump did in 2016, but there's a huge change in the popular vote from what he did back then, because he was down, I believe, 5 million votes at that point in time. So how's it change the U.S.? Well, I don't know if the election really changes anything in this from the standpoint of entrenched interests and people having difficulty having political conversations. I don't know if this really changes it. It may make it worse for all I know.
One more question, and then we'll wrap. Dennis Zaslavsky, if U.S. debt is increasing as you point out, would Bitcoin and gold be the hedge, or would you look to equities, private or public? And he did say thank you.
Yeah, so the debt situation plays out through what I believe will be inflation, right? Because the only way to service that debt is to inflate the money supply dramatically. And so this sounds like a nuance as far as wordplay, but they're not so much hedges against debt. They're hedges against inflation. Yes, I think precious metals and cryptocurrencies are great hedges. As far as equities, I'm a little bit more hesitant on that, because if you look at our best example, which I think is the 1970s, you commonly see people today talk about, well, equities are a great hedge against inflation. Well, that's not historically true. If anything, I would anticipate that they kind of tread water. And that's what happened in the 1970s. You had the price level double over a 10-year period. And you had equities, I think, were up, depending on how you measure it, 103 or 107%. So they barely kept their head above water through that period. So I think you got to go to classic inflation hedges, cryptocurrencies, precious metals, certain types of real estate, certainly farmland, exporters from the U.S. Those, I think, are all great inflation hedges.
Give me 1 second. I just got to fix my background went blank. So, the wonders of modern technology. Somehow we'll get this straightened out. But Chris, I want to thank you so much for joining me. I think this was an excellent discussion. We do have a new president, and we will all get ready for that. And again, Chris is from WindRock Wealth. He is one of our registered investment advisors. And if you need help, he's one of the guys that can help. So reach out at wealthion.com and fill out the form, and Chris will be the person to get back to. Chris, thanks so much, and we will talk again.
Thank you, Andrew.
That's a wrap on another discussion here on Wealthion. Thank you for joining us. If you need help being financially resilient, please head over to wealthion.com and sign up for a free, no obligation portfolio review with one of our registered investment advisors. And remember to follow us on social media for the latest news and information to help you invest wisely. And if you could like and subscribe to the channel, we greatly appreciate it. Don't forget to hit the notification bell so you can find out when we post new videos to the channel. Thanks again for watching, and until next time, stay informed, be empowered, and may your investments flourish. And if you like this content, please watch this video next.